Hi everyone, my name's PK, and here I have Devyani and Rishabh, who are clients of the Property Investment Accelerator. This is going to be really interesting because it's a phenomenal story of someone or people, a couple who have made, let's just say, some not so great financial decisions in the past, had to overcome a lot of skepticism and fear, and then jumped in, maybe not jumped in, carefully tread the water of property investing. And now they have three investment properties, hopefully many more in the future. Devyani actually came from India during the COVID period. Something shifted within her during the pandemic in 2021 with $3,000 in her pocket, figuratively speaking. She came to Australia, and then fast forward to now, they have a property portfolio. She's a clinical researcher, and Rishabh, they're both based in Sydney, is a product manager. Really inspiring tale of new immigrants, someone or some people who have embraced Australia, embraced what Australia offers in terms of the wealth of opportunity in building a lasting future. And now they're obviously doing it for themselves and also for the next generation, their daughter and likewise. So I'm really excited to have you both on, and I should start by saying congratulations.
Thank you so much, PK, for having us over. Hi everyone. My name is Devyani, and he's my husband, Rishabh.
Hey guys.
By profession, I work into clinical research industry, and I back in India. I mean, I am born and brought up in India, and I came to Australia in peak COVID, as PK mentioned, in August 21. So we had a PR, but we never really seriously considered moving in here. But because of some circumstances, I had to make decision to come here. So I came here with $3,000 in hand and just job offer at hand. I landed here in unknown territory. We really did not know anything about Australia and what would be in future for us. But just came to Australia. I was in quarantine in Darwin, so probably everybody would kind of relate to that. I was in quarantine in Darwin for 14 days. Then I came to Sydney. I stayed with our friends for 3 weeks. And back in India, we never really owned any house. So when I started living with my friends there in Sydney, their backyard kind of opened into a very huge park, and I saw all those beautiful houses there. I just thought once, will I ever have house in Sydney? Because I came here with 3,000 and just job, and no savings back in India because we made a lot of bad decisions with respect to investments back in
Yeah.
India. So that was just a thought. And fast forward today, we have three properties. So yeah, that's that's a bit of about myself.
$3,000 to three properties. I think that makes a good tagline for this video.
Yeah.
Um, I want to
Yeah.
ask just a little bit of the background. You don't have to go into it in super detail if you don't want to, but
Mhm.
sometimes it's like hard to invest when you've been burnt. So now, you mentioned that you did some cryptocurrency and some other things in India. Like what was your mindset going into those investments, and what's your mindset going into real estate in Australia?
So let me first say thanks for the opportunity. I think we forgot to mention that, but yeah, back in India, I think I am like I am like the investor who gets actually swayed by a lot of quick returns. And while I did invest in cryptocurrency, I was severely scammed and the scam value was almost to the tune of $150,000. So it was that level of sudden loss that we had. And it wasn't loss, it was just that we saw huge growth in our cryptocurrency portfolio in one fine day because of the security challenges and because of the hacks that happen in this very volatile form of currency. We suddenly lost out on most of it. Thankfully, a little bit of it we could salvage, but hugely burned and really skeptical towards investing in anything that's not secure. So we put all our monies in back in India in fixed deposits after that because that was probably the only secure thing we saw that was working for us at that point.
Right, right. It makes sense. And so then in 2022, so a year after you came, you bought your first home in Sydney. Uh,
Yeah.
like what was that process like? Like, I mean, I'm just stepping back and thinking if I had moved from India in 2021, probably I wouldn't have enough money to buy a home in Sydney in 2022. So like, did you guys just really work really hard and save up to get that home?
So I'd like to take that because when I came and I actually came in Jan 2022 and she allowed me a day to rest. So I came, we were heavily jet lagged, me and my daughter both. We had a really long flight and quarantine and everything. So while on the second day when I came here, she said we are buying a house in Sydney, and I thought she's out of her mind. But she had that vision, and I think had that clarity that she's saving up for a house. And I didn't have a job then. So I was saying, I don't even have a job. It's just your salary we are working on. And I started looking for a job then. But I think she was pretty clear in her head that she wanted a property. So the next 12 months, we actually made our first offer in November of that same year were testing times for us in terms of every dollar that we earned extra, we saved. I actually took up a consulting role outside of my job. I got a job pretty quickly, but I also was trying to work for the government of Victoria, trying to get startups and then people getting into digital marketing, trying to help them out. So that was a side gig I picked up along with the core job. So we worked really late hours, and she was also working, saving on every travel bill and everything that we were able to save up. So the first year felt as if we have actually gone from a pretty comfortable life in India to a really struggling life here. But
Hmm.
I think looking back now, I think every dollar we saved was worth it.
Right. I do want to go back to that point as well, Devyani. You know, this concept of like pretty comfortable life in India versus at least in the short term a pretty tough life in Australia. Why did you guys like move? I remember in your email to me you said something shifted within me. Like what? It seems like you're the visionary perhaps in the couple, Devyani. Like what was it that shifted within you to not only move here but then have that vision to get on the property ladder?
So basically, back in India, my job was decent but modestly earning as well. And but it was a COVID time. A lot of companies were going through tough times. So then I got an opportunity here, and then I thought, why not grab it? Because we already had a PR. So then I came here first. I stayed with my friends, and then after 3 or 4 weeks, I kind of rented a studio apartment in Epping, that is in New South Wales. Stayed there for a good 3 to 4 months, and then before my daughter and my husband came up in Jan 2022, that is after 6 months, I kind of pretty much settled everything for them with basic minimum things, what anybody would require to start everything. So as I mentioned, we never really owned anything in India. So as a woman, I always wanted to have my own house. And when I was staying with my friends, they kind of opened that opportunity, that how investment in property business makes a lot of money here. And that kind of, it's all thanks to my friends basically who kind of guided us in a right direction that anyone who should come, anybody who comes here should actually invest into property because that's how people here make money. And of course, we mentioned that we suffer a lot of losses back in India. So that's how it was very burning thing in me that we want to do something on our own. We want
Yeah,
to build wealth here. So that's something I was very
that's lifted. Yeah.
determined. And when he came in Australia, the next day I told him that we want to buy a house here. And he's like, okay, you want to buy an apartment? I said, no, I want to buy a house. Then he was like, do you want to buy townhouse? I said, no, I want to buy a house. It's a freestanding house. And he said, are you mad? Are you crazy? We don't even have money. I said, I know we don't have money, but I want to buy and we will do it somehow. So yeah, so back in India, we never had any mortgages. So whatever salary we had, we were just splurging, buying things, traveling around.
Yeah.
So that's where he mentioned the kind of struggle because here we were, counting every dollar that we were earning and spending wisely wherever we could. So,
Right.
so that's what little tough for us. But yeah, we were looking at the bigger picture. We were kind of imagining that we would have our house in Sydney one day.
Yeah.
I suppose
And
it's especially sweet because like back in you're in Mumbai, right? You guys are from
Yeah,
Mumbai.
yeah.
yeah,
It's like
yeah.
I don't know so much, but like I would imagine freestanding houses are like, it's impossible for the average
Nobody has a
person to
freestanding house. Yeah.
buy these days. I mean, I think one of my friends, his dad lives in Juhu, like Juhu Beach, and he was like being a little bit cocky and like, oh, my dad this and that. And I went to visit them one time and it was this tiny little apartment, and I was like, this is what you were like getting all boastful about. But anyway, I digress. I mean, you really had a fire in your belly, Devyani, and kudos to you. I mean, I don't think I could leave my son at the age your daughter was, and
Yeah, she was 7 back
experiment.
then.
She was a 7-year-old, and just go and form or create a life. I mean, that requires a lot of determination. I don't think many people can do it. So hats off to you from that perspective as well. And so then, I think the great thing about your story is that you used that first purchase in Sydney, that house, to catapult your property portfolio. You drew equity, I think, again and again and again. And I think that's a really good lesson for everyone where, of course, your own home needs to be a sentimental decision as well, but at the same time, try overlay it with a way with a mindset that, okay, I can potentially use the equity in here not as dead money, but as a catapult, a launching pad for my property portfolio. So I don't have to save up the deposit every single time.
Yeah.
Could you guys take me through how you like almost bought a house and land package as your first property, investment property, and why you didn't?
Okay, so that's something for me to handle because so when we actually bought our first PPOR, we didn't realize what we were doing at that point in time. We just wanted our own house, but that house was a disease estate, and there was somebody who was in distress to sell it in a month. So we got it a little under market value. We at that point didn't realize that we are getting something under market value because we were maxing out our budget, but we got it slightly under market, and we did a little bit of reno, which actually helped us gain that little bit of equity at the start. We were told by friends that this is a concept only in Australia where you actually have equity and you can take out that equity and you get that as a deposit for your investment properties. And a lot of people around us were doing a lot of investment properties, and that at that point I thought that's probably the only way to invest here in a way where it gives us leverage as well as some decent form of returns because none of the other instruments were actually helping us in that. So we saw the savings deposit returns and we saw the ETF returns, and none of them were really attractive. So we reached out to a company who to be fair, the person in that company really helped us understand the whole concept of equity, depreciation, understanding how you can actually put down a deposit and the entire process. Also, things like negative gearing, positive gearing. So I think the start of this entire journey in terms of giving us an overview of property investing started there. So we were very happy with the way they dealt with us. The only thing that I and Devyani both were really struggling with is the amount of investment needed for one property. So the entire house and land package was costing upwards of 1 million. That
Mm-hmm.
was only in one area, and it was very restrictive in terms of what we could and couldn't do in terms of a design, in terms of land. So it was like a fixed kind of a decision that if you want, you get here. Otherwise, you probably won't be able to make money. And we thought at that point in time, taking a risk for one particular area, maxing out our borrowing capacity and buying in one risk area, and what if it doesn't work out? All those ghosts of my past in terms of taking one wrong decision and actually burning there started coming. And at that point in time, Devani had started seeing a lot of your videos. She was following. So at that point in time, I think it was an opportune moment where you put out a video at exactly at that point in time why you should not go for land and house packages, and that is the video she made me sit over dinner, and that's where it started.
Right, right. It's
We learned a lot from the gentleman who was
mhm,
guiding us on house and land package. We were really not aware of basics of investment property, basically. So he guided us a lot. He taught us a lot of things. He was a
mhm.
good gentleman. But yes, it was a risky decision for us in terms of putting all our eggs into one basket. What if, the building of the house gets delayed?
Yeah.
We wouldn't get any money out of it. So that was a risk.
Yeah.
We thought that was too much of risk for us.
I think a lot
Yeah.
of people from the subcontinent have this innate or inherent preference to buying something brand new. I don't really, maybe you can tell me why that is, but I don't really know why it is, but there's so many downsides that actually appear like upsides. For example, a brand new building has a warranty, but then you scratch the surface, literally, and you find that the quality of new builds these days are not comparable to those types of houses built in the 80s or in the 70s. You find that we shouldn't really invest for depreciation benefits alone because as and when or if we sell, a lot of that needs to be paid back to the ATO. We find that the land to asset ratio is very low in new house and land packages. Buildings that depreciate, land that appreciates, that equation is not favorable to house and land packages. A lot of the margin is made by the builder or developer, and you're effectively pay I mean, I could go on and on, but you know, these things aren't immediately clear. So I'm glad, not that established houses are the only way to go in every situation, but I'm glad that you converted into buying established properties. Um, and so then maybe we'll just touch on this as well. You've been kind of had some unsavory experiences in previous investments in India. Was it a struggle to kind of build confidence from a random person on YouTube and, lay out thousands of dollars for a course that promises, well, I don't promise the world, but may appear that way? Uh, or was that a fairly straightforward decision?
That was fairly straightforward because there were hundreds of YouTube videos that I went. I read a lot of reviews, and to me, I being an Indian, understanding your language, understanding your communication is fairly simple for me compared to anybody who is non-Indian guiding us here. So my limitation to understand the communication and accent basically. So your communication is very straightforward. You simplify things really well. So I went through a lot of videos. I went through a lot of feedback, and then kind of I convinced him to
Yeah.
buy your course.
Yeah, I actually put a timeline saying that okay, we've gotten out of this London house, but we had invested about 4 or 5 months on that. So we were already losing out on time in terms of getting in. So I said, I give you a year. Let's hope we invest. Otherwise, I would say that this money is also wasted. So she was under pressure.
There was a bit of pressure there. And I mean, it did, let's go into that because it did take you a while. I think when did you when did you buy my course and then when did you end
It
up buying
was
your first investment property?
Yeah. So we bought your course in August 23.
August 23.
Yeah, August 23. And then Rishab's after a couple of months only Rishab's role was made redundant. And then life happens. I was procrastinating basically that because since I convinced him it was my responsibility to go through your course. He wasn't taking much of part in that. And then life happens. I was giving him excuses like my work is too much. I have to do household work. I have to look after my daughter. I have to cook and so many things. So these are the reasons I pretty much procrastinated to even start with your course. So I enrolled in your course in August 23. We were ready to buy our first investment property in January 24. But I procrastinated, and one fine day he got very agitated and he was like, if you do not now take action, I'm going to go back to house and land package and invest into that. So that's something. Then he built a pressure, and that's something then day and night I sat and saw your videos, and simultaneously we were taking action to buy our investment property. So we bought our first investment property in June
June,
24.
June 24th.
Yeah.
June
So
24.
ideally, so we bought in a hot market in June 24, and then looking back, I realized the 6 months of my pure procrastination, I lost out on a 60,000 opportunity cost. So the house that we bought for 460K in QLD, regional QLD, had it been had it been 6 months ago in February, I would have pretty much bought the same house in 400K.
Yeah.
So just because of my procrastination, I had to pay 60,000 more on the same property probably.
Right, right. And I just want to dive a little bit deeper into that psychology because I think it will benefit people,
Hmm.
whether they're doing my course or not, or whether they're interested in the course or not, just in general in terms of making decisions, because it's a hot market now in many markets around Australia. It was a hot market back then in many markets around Australia. Presumably, Devyani, you would have seen perhaps through my posts or client deals or other content online that the property market, a lot of suburbs were moving very fast, and that, folks in the course, outside the course, people just doing it themselves, etc., were making a lot of money very swiftly. I mean, not to promote FOMO, but what was your kind of your thought process? Because it's like, on one hand, you see that everyone's making money like instantaneously, and on the other hand, I'm not saying you're making excuses, but we make excuses for ourselves often. So like, how did the weighing scale or how did you reconcile those two in your mind back then?
So at that point, I think Devyani so we went through a bit of a personal crisis. Like my job was made redundant, and while I found a new job in a month, there was a lot of emotional trauma that happened along with it. There was a legal case that happened after that because I joined a very similar organization. So I think she's not completely honest when she said she procrastinated. There was a lot of emotional turmoil that happened in those 2 months where we felt that okay now, and one we were out of it in Jan, we were ready to invest, but I think it took a toll on us, and we said we probably wasted that time just to start feeling happy again,
Mm,
because the job was good, I was doing well there, everything was happening nicely. So I think there was this pressure of properties rising in value. But at that point in time, I think we were excusing ourselves at that point, saying, okay, we've just been through a lot. Let's just breathe before we get back into something which is again pressure. So I think that was supposed to be a month, and it went on for a couple of months, and then a month after, and we started actively again in May. So I'd say we did lose out on about 5 or 6 months, and but that was also a mixture of a lot of things. It was not just sitting idle and doing nothing.
got it, got it. Yeah, I think that makes sense to me. Uh, Although money is there to be made, it's not worth putting undue financial or emotional pressure on ourselves just for the sake
Mm.
of, making an extra $50,000. So
Yeah.
I can resonate with what you're
Yeah, to
saying.
be honest, we didn't realize it would be $50,000. So,
There's a
so
tipping
it
point,
probably would
maybe.
have been worth it. Yeah.
Um, and look, the properties that you bought back in Townsville in mid 2024, I think for 460 now, that's probably close to or even above 600,000. And then soon after you bought in WA for just shy of 500, that's probably approaching 550 to 600. And then you bought again in WA and same sort of story. Um, I always, we often talk about successes on these YouTube videos or podcast episodes, but I also want to ask about like what was the biggest challenge that you faced in trying to buy these properties, one or more properties, and were you ever demoralized? And then how did you get past that?
Okay, you
Okay, so
answer.
for us, the first investment was the scariest. because it was a really hot market, and we've never had sales agents being as rude as they were in in the Townsville market at that point in time. So we've had crazy experiences where we've as it's a normal gesture. We actually call up people and they call back and then return the inquiry, but we weren't getting any return on inquiries. We weren't getting callbacks for people who said they'd call back. But that was just the start of a lot of other issues that because this was the first time we were investing, we actually made a slight error in terms of making an offer to a property within that same area, but it unfortunately was in a very strong public housing structure. So we realized very soon when we talked to the property manager there are a lot of public housing and it will probably not get the rent you want. You might have some disturbances along the road because it's right in the middle of a cluster of public houses. So we were very scared. We thankfully we did all of that due diligence in the cooling off period, so we were able to back off. But at that point in time, it felt very scary because there were too many factors that were moving. So a hot market, yes, and we lost out on at least 15 or 20 offers that we made. So we weren't realizing how much price to put in. I feel the first investment was very scary. The regional WA investments have been really smooth for us, as in though they were slightly warm, moving to kind of hot markets, they were extremely simple. The people were very warm and genuine. We never faced any challenges with settlements. But I think the Townsville property, we had challenge along every single way. As in every single step of the way, we had a lot of challenges that came along.
Right. And so, I mean, thankfully you were able to exit that deal in the cooling off period and, take the time to do your due diligence as taught. Um, I mean, did you feel that you learned how to build better relationships with the sales agents after that first property experience? Like, was it a learning curve, or would you have, actually, PK, I rather that never happened, I rather it was smooth from day one.
Yeah, I think Devyani made a lot of friends. I think I do the analysis part of things. I'm not a very people's person, so I actually don't have the knack of calling people up and building relationships. But she probably made a few good friends in Townsville. We actually received a Christmas card from one of them, which was personalized.
Oh, nice.
So at that point, we realized this is the first time a sales agent is. She was not even a sales agent. She was just a concierge of property who managed property managers there. But she was so happy to help us in every property. So we didn't have the flood zones right in front of us. So we should just pick up a call and ask her, is this in the public housing belt? Is there a flood? How many houses nearby? And she was always enthusiastic to help us out. Even later, when we were looking for our second property, we first thought that this market is not capped out. Let's look for another property there. At that time as well, because the relationship was built so nicely, she was always ready to help.
Right, right. Oh, that's
Yeah, and
nice.
when we bought our first property in Townsville, and when we were looking at the second property, it was easier because I was knowing a lot of real estate agents. So if I could just call them, they would know me, and then they would say that now this property is available. Are you interested in that? So yeah, so over the period, of course, I built relationships with few of the sales agents as well in QLD.
Awesome, awesome. And I'm sure you have a lot of friends or colleagues or perhaps even family members in your community there in Sydney. You mentioned when you first moved, a lot of them inspired you to get into property. I'm sure you're
Mhm.
inspiring a lot of them and others, newcomers, to get into real estate. I know you've helped a few already of your friends, with buying. What is the how do you say? What are the key challenges that you find that people in your community have in their real estate journey and the mistakes that they're making? And what is like your advice to them? I'll start off just to give you an example. I know that when I first started investing in real estate, for some reason I was fixated on buying a display home because I think for some reason I thought they look really nice and there's a rental guarantee and the person who's paying your rent is the builder or the developer. They're going to be there for another 3 years. So I'm like, this is like too good to be true. Let me just, and of course, there's so many downsides of buying a display home. I would never do it. Thankfully, I never did it. And I saved a couple of my friends from doing that as well. So just like that, is there any mistakes or challenges or maybe even mindset blocks that your community experiences, and what's been your advice to them, or what's your advice to them?
So I would not say it's a mindset block. What we've observed in our community is that they are sitting on a gold mine, but they are not taking advantage of it. So we were pretty late to move into Australia. A lot of our friends have actually been in the country for a little more than 8, 9 years. So they've built significant equity on their homes. We always used to talk, had we been in the situation, we would have had 10 homes by now. So a lot of our friends, we've reached out, and some of them have converted to us asking us to help them, is just because we've told them that there is a significant amount of equity that they've not been able to take out and not invest in investment properties. But I think when we've crossed the bridge after 3 properties, and we've done that in a span of 3 years, and a total of four. A portfolio of 4 properties over 3 years is unreal for a lot of people. That opened their eyes to what could happen. And the fact that we actually didn't pay anything out of pocket and everything was through equity actually opened their eyes. So a lot of people have now started reaching out because, and I feel that in every aspect of life, unless you succeed and then show them that path, nobody really invests in you. So I think a lot of people now have seen the possibility. We just did the calculation, I think, a couple of weeks back, and if we were to actually just get the same rate of returns, even at a 10% rate of growth for the next 8 years, we'd pay off our PPOR. So even if we sell off 2 of the properties that we've invested in, that I think a lot of people want to pay off their personal house, their PPOR. A lot of times the investment property then becomes the instrument to do that. So making passive income maybe not be something that they are so obsessed with, but paying off their own house in 7 to 10 years is
Hmm.
something everybody is interested in. And thanks to you, we've been able to come to a path where we can see that possibility in the next 7 to 10 years. And probably that probably is something that not a lot of people think about, of
Hmm.
how they can use that same house to pay off the same house in the next 7 to 10 years and not wait for 30.
Yes, that's amazing. You can't be what you can't see. So I suppose it's all well and good for property experts, quote unquote, to preach it on social media. But when you have a friend who lives down the road from you and his name is Rishabh, and you're seeing what he's doing, it's like, oh, okay, this stuff it really does make sense. For those people who didn't connect with that point that you just made around paying off your principal place of residence in 7 to 10 years, could you, if you're comfortable sharing the numbers, please share them. If you're not comfortable, please just talk about it conceptually.
Yeah.
Could you just share, like, okay, so let's say you've got this principal place of residence in Sydney, and you have X amount of debt on it. How are you actually able to pay off all that debt in 7 to 10 years?
So yeah, what I've done in terms of calculation is, well, let's consider I'm not going to exact numbers, but consider the debt to be 1 million, and it's around 1 million for us for our PPOR. All our properties are upwards of 550 or 600 and have made about 200K already on them. Uh, if I actually just do a straight line 10% on each of the investment properties, I'll not even look at the three, I'll just look at the two. So I just look at the regional WA and the Townsville property, and I keep building 10% on this base. I end up actually having more than 1 million in equity that happen at the end of 10 years. Actually, at the end of 7 years. 10 years is very comfortable. So at the end of 7 years, I have about $40,000 of my, and what I did also was for that 1 million, there's obviously some amount of principal that's paid off over the next 7 years. So it comes out to about 950K. And I didn't realize that I pay so little principal in the first 7 years that I've actually all my loan left towards the end of 7 years. But thankfully, all these properties actually go upwards of 1 million. So yes, I will pay a little bit of capital gains, and I probably won't pay off 100% of the loan in 7 years. But imagine a million loan actually going to about 50, 60,000 at the end of 7 years is a consideration that we've never had. But this is allowing us, and if we actually have the three growing in the same rate, we'd easily pay off the loan.
Right. Thank you for explaining that. I know I put you on the spot there. And people might think 10% growth rate on annum is a little bit optimistic, but you have to consider how compounding works as well. And, places like, of course, may not be the best investment now, but when you bought in Townsville, when you bought in WA, the buying window was basically perfect. And so if you're getting that 25% initial growth rate in the first 1 or 2, 3 years, even in the subsequent years, it goes down to long-term averages around 7% or wherever, even lower than that, but still on a CAGR, compounded annual growth rate average perspective over 7 to 10 years, it's still what you're saying, almost double digits, or if not north of double digits. So that's the beauty of compounding growth, and that's the beauty of market timing, and that's the beauty of using data. So I think that's pretty terrific. Um, Devyani, if you don't mind me asking you a question, what's kind of like for your own portfolio, what's what's your sort of vision in, let's say, 10 years time? Of course, Rishabh, you're mentioning paying off your own home, but do you have, let's say, actually, let me scratch that question, 30 years time. You're still young. In 30 years time, uh, what does success look like for you? Sorry, it's not
I
meant to be
think
a job interview question.
no, I think my I always keep telling him I want 10 keys in my 10 fingers.
Beautiful.
So yeah, we want to build our portfolio and comfortably retire here, and maybe move back to India if we feel like after our
Maybe 20 years, yeah.
maybe yeah
10
maybe
or
in 10
10, 10 or
15
20
20
years.
years.
Right. And you guys started this in your 40s, is that correct?
Yeah,
Yeah,
that's
so I think that's pretty cool as well to mention that, you don't all everyone has to start at 20 or 30. Even
yeah.
starting at 50 is fine. Birds fly high as they're able to. You do the best with what you have, and starting at 40 is not too late, nor is starting at 50. You do the best with the time remaining.
Yeah,
Maybe the
exactly.
last question from me before maybe if you want to say anything else. What do your friends or family or former colleagues in India think about all this? Do you share this with them? Maybe they'll see it after I post this, but do they know what you've been up to in the real estate game? What's their perspective?
So we've definitely shared it with close friends, not obviously the entire set of friends that we have. And there was a lot of concept that we needed to sell to them of how this works because in places like Mumbai, the property prices have been stagnant for the past 10 years. So they don't quite understand how this equity and this equity that released actually helps us buy more investments and we can pay off our loans. So all in all, I think they are proud of what we've done. They've seen our struggles when we were back in India. They've seen how much we've lost, and this because yet they are very close friends. They also see a lot of emotional turmoil that happens with every financial loss that you go through. I mean, at a point before COVID, I think our bank accounts were almost empty. So because while we were both together earning pretty decently, because of so much invested in the wrong investment vehicle, I think we were in a position where we started from scratch then. But because of COVID, a lot of our salaries were capped and we had a job uncertainty going on back then. It didn't really grow for the next 2 years. So they've seen us struggle. They've seen us actually and even when we were in Australia, there used to be calls with friends saying, "Is all this struggle worth it? As in, you're practically not enjoying life. This is all
Mm,
that's happening." And whenever I used to call up and reach out to friends, I think they used to always tell me life is all about enjoying. Why are you struggling so much? And because we both had jobs and we were saving up to buy put that deposit for our PPOR, I used to always crib because I was the one who was struggling more than her, and she had a vision, and I think she had that unique law of attraction work for her where she said, "I want this," and she got it. I was the one who was struggling because I felt that I had a pretty easy life back there, and I was struggling here. So all these conversations have helped them understand what we went through and what we've achieved, and they're really proud of us.
Yeah, that's nice. It's a nice feeling, when people are really proud of you, but and they intimately know you, so they've seen you on that journey. It's really satisfying. I just want to ask one more. Sorry, I know I said that was the last one
It's
before.
okay.
This is for Devyani.
Yeah.
Um, from a female perspective, there'll be so many other wives or female partners that will be watching or listening to this episode. I think the statistics are the statistics. The vast majority, I think it's 80% or something of property investors in Australia are male. I also know from a lot of conversations that I have that females, of course, have the wherewithal and the competency and everything to invest just as well as males, if not better. In fact, I have less females, more males in my course, but I find that the women I don't know what it is. Sometimes they actually get much better results than the males. But there's a lack of confidence. I don't know if it's fair for me to say this, but I sense in my Facebook group and other places, there's a lack of confidence from the female contingent to really put their stake in the ground and run with their financial dreams in property investing. You've done that. You've let's say quote unquote convinced Rishabh to get on board, and of course he's a willing participant and contributor to your journey as a couple. But from your female perspective, what advice can you give to other women out there that are just, it's like they're sitting on a treasure chest, but for some reason they just don't have the confidence to dig, 2 inches or 6 inches and excavate that treasure chest, or they're not able to kind of bring their partner along the journey with them.
Well, talking about myself and my mindset, basically, as I mentioned, we came here when we are in 40s here, right? And with nothing actually, when we came here. And so I would like to say that even if you do not have anything, no savings, no safety net, it is never too late to start anything, right? And when we saw that all our friends are talking about retirement plans, we all of us, our friends are in 40s, so they're talking about retirement plans, and we found ourselves starting everything from scratch. So I think taking action is the most important. Um, just take a leap of faith, take action, and I think prioritize your work. Time management is extremely important because we do have a lot of things. We do not have household help, so we really have to be on top of time management game basically, and block time to do something like you want to educate yourself. Block 1 hour of time every day, and that's something kind of helped me. Um, uh, Doing your course and educating myself on that also. So I would just say just take a leap of faith and think things would work definitely. And I think the woman of the family is happy, then then the entire house is happy. So I think woman is the decision maker, and she can sit on husband's head to get things done.
Rightly
So
said.
that's the very biggest power any woman would have.
Rightly said. I don't think many husbands can achieve much at all without the backbone that their wives or partners provide. The woman is definitely the heart of the family and the life force as well. So I'm sure Risha was very grateful to have you in his of course in his life, but also in his property journey. So I'm very happy to have spoken with both of you. Is there anything that I didn't ask or anything that you wanted to share before we wrap it up?
So yeah, I'd probably like to add to her point. A lot of times, I was not very confident that she could take that decision, but I actually remember this is something that my mom told once is that because she had built her own journey through property investing in back in India where we were struggling as kids and she did it. So she always used to tell me this that nobody understands the home like a woman does. And at that point in time, those words resonated. Because you buy a house, you just don't look. I look at the numbers, but she looks at a house of how a woman in the house or how a family will come there, how they will experience it. So the decision making of every house that we've had, it's not just purely basis of numbers. We've actually rejected a few houses because she felt that the woman of the house won't be comfortable. Or the house that we first invested in, there were no kitchen cabinets. And I said, what's the point of putting kitchen cabinets in the house? It's going to add a few $1,000s to our bill. And she said, there's going to be a woman in the house who's going to be cooking. She needs those kitchen cabinets because that's how it's going to attract her. And that's what's going to add to her storage and keep her house looking neat and clean. So these small tips, I think a lot of women have, which a lot of men miss out on. And for us, because she's the person taking that action, I think most of our investments have been in the line with what the decision maker of the family would feel when she first walks into an open home or walks into a rental open home that was created. So all in all, we were able to charge more rent because that thought was actually put forward by her. A lot of times we are charging in some of the markets above market rent because some of these properties are thought through in that way and thought through how the woman of the house will enjoy this house. So I think that's a very important point which a lot of men miss out. And just wanted to add that.
Yeah, great point. And I like the frame, the picture behind you as well. I trust that's not a virtual background. That's a it's a
Mhm.
real world map, and yeah, it's very beautiful. But thank you for taking us all on your journey. It's from $3,000 in 2021 to three properties, well, plus your principal place of residence, all done through equity, paying off your home. Let's see, in 7 to 10 years, hopefully, and then we'll get a ring for every finger by 30 years, a key for every finger on both hands in 30 years. So I wish you all the best. I'm very happy to have helped you in whatever small way I have. And thank you so much for making time.
Thank you
Sure.
so much, Vicky. You have played a huge role in our success. So thank you so much.
Yeah, we wouldn't have been able to make so many decisions had we not just had your course, but also had the response from the whole. So I believe your community is the biggest asset you have because a lot of our questions, even when you look at property today, when we just search for a property in your own community, we get so much information about the industries, about risks, about floods. And that's the rich data that nobody talks about. But how your community are actually pushing you to find the right properties, helping you. There were a few people who we've talked to from your community, and they've guided us. So there have been a lot of inputs just coming in, not from the content of the course, but the support of the community that's there within, and that's actually really rich in terms of help.
Thank you. Thank you very much. I really appreciate it. And thank you everyone for watching or listening wherever you are doing that from. I really appreciate, your attention and your time. There's more than, I think, 200 of these client interviews now on the client results playlist on YouTube. But like I always say, I really don't mind if you use me or don't use me, but go through each of those client interviews because you'll learn from magnificent people like Rishabh and Devyani. You'll be inspired, you'll be educated, and even if you don't go ahead and work with me, you'll at least take the next steps on your own journey to financial independence. And I think that is what matters the most. Share it with someone who needs to watch or listen to it. Give it a like, give it a subscribe. And once again, thank you, Rishabh and Devyani.
Thanks a lot. It's a
Thank you so
pleasure.
much.